These are 8 top big cap stocks with large percentage gains today. Our review on THTX. Theratechnologies Inc. is a clinical stage biopharma company out of Canada that's working on therapies for some really tough to treat areas, mainly HIV, NASH, and oncology. In the US, they already market Trogarzo and Egrifta SV, which are both geared toward helping people living with HIV. On the research side, they got a pipeline that includes pseudocytaxyl zendusortide, a peptide drug conjugate aimed at advanced ovarian cancer, so they're trying to make moves in oncology too. Now, today was wild for the stock. Shares popped 45% with nearly 49 million traded, which is massive volume for them. The fireworks started near market open with a huge 70% breakout that even triggered a halt up, and then they had another 25% spike in after hours, so clearly something big is driving this. The big news? FuturePak made an unsolicited offer to buy the company for $255 million, with $205 million in cash and another potential $50 million in milestone payments. That's a 164% to 238% premium over where the stock was sitting just yesterday. Naturally, that kind of premium gets people excited. But here's the twist: Theratechnologies turned them down, saying the offer wasn't up to par. Instead, they've entered exclusive talks with a different, unnamed buyer. And they've added a go shop clause to the deal, which means they're still open to hearing better offers for a certain period. Basically, they're playing their cards carefully, trying to maximize value for shareholders. And you can tell from today's price action that investors are betting this ends with a sweet deal on the table. It's a mix of deal drama and biotech potential right now, which makes THTX one to keep an eye on. Still a small cap, still with challenges, but today, it's the acquisition buzz that's doing all the talking. Our review on CRML. Critical Metals Corporation is an Australia-based mining company that's laser-focused on the critical materials powering the electrification wave, think lithium and rare earths. Their flagship is the Wolfsberg Lithium Project in Austria, which is actually the first fully permitted lithium mine in Europe. That's a pretty big deal considering how hungry Europe is right now for domestic sources of lithium to feed its EV and battery production ambitions. They've also got a stake in the Tambries Rare Earth Project in Greenland and a few other mineral projects in the mix, so there's definitely a broader strategic play unfolding. Now let's talk about today. Shares jumped 40% on 6 million traded, which is a heavy volume day for a company with a market cap around $206 million. This kind of move usually tells you something meaningful is in the air. While there wasn't a single bombshell headline, it looks like a combination of investor interest picking up around the Wolfsberg project and overall market momentum toward energy transition plays. With Wolfsberg being one of the very few shovel-ready lithium assets in Europe, and strategically placed with great infrastructure, Critical Metals is sitting in a sweet spot if lithium demand continues to heat up. Investors might also be betting that strategic interest, maybe even from European automakers or battery players, could come into play down the line. So yeah, the move today feels like a vote of confidence in both the asset and the bigger story. Keep your eye on this one. It's a small cap with potential leverage to some major macro trends. Our review on CBLL. CeriBell Incorporated is a medical technology company doing some really interesting work in the neuro space. They've built this point-of-care EEG system, called the CeriBell system, that's designed to help doctors diagnose and monitor serious neurological issues, like seizures, right there in the ER or ICU. It's a portable, AI-powered platform that gives real-time, actionable feedback based on a patient's brain activity. Now, let's talk about what just happened with the stock, because it's been a wild ride. After getting crushed by over 45% yesterday, shares of CeriBell came roaring back today, climbing 34%. And it all comes down to tariffs and how investors initially misunderstood the situation. The panic yesterday started when news broke about new U.S. tariffs on goods imported from China. Since CeriBell sources their headbands from 2 Chinese manufacturers, investors immediately assumed that this was going to wreak havoc on their margins. But the company came out today with some much-needed clarity, and that changed the tone in a big way. They basically said, look, we've got enough inventory already in the US to keep things running smoothly through at least the third quarter of this year. So, in other words, no immediate impact. And since they use a first-in, first-out accounting method for inventory, even when the tariff-related costs do start hitting, it won't be until Q4 at the earliest. What's more, their gross margin for last year was 87%, which gives them a pretty decent cushion. Even if tariffs shave off 8 to 10 percentage points later on, it's not a catastrophic hit, especially since the tariffs don't even touch their subscription-based revenue. So today's rally feels like the market taking a breath and realizing, okay, maybe we overreacted. This rebound is basically the correction to that panic sell-off. Longer term, the fundamentals still look compelling. If CeriBell can keep scaling and getting its tech into more hospitals, and maybe find some workarounds or domestic solutions for headband production, they could be in a solid spot. Bottom line, yesterday was fear, today was logic. Our review on MKTW. MarketWise Incorporated is a financial content and software platform that delivers premium research, tools, and education to self-directed investors. With over 135 paid products across 11 brands and nearly 500,000 paid subscribers, they've carved out a niche for investors looking for actionable ideas and market insights. Now, their stock just popped over 33% to $13.37, and it's not hard to see why. They reported preliminary Q1 billings of $70 million, which is a 26% jump from the prior quarter. For a subscription business in this space, that kind of growth is a big deal. It shows people are not just subscribing but sticking around and spending more. What's also turning heads is how shareholder-friendly this company is being. Over the last year, they've paid out 80 cents per Class A share in dividends, which works out to a 16% cash yield based on the March 31st share price. And now they've kicked off a share buyback program too. Add in the fact that they have no debt and a healthy cash position, and you've got a lean, cash-generating business that's rewarding investors in a big way. Low volume likely helped amplify the move today, but fundamentally, this was a show-me quarter, and they did just that. Our review on RGC. Regencell Bioscience Holdings Ltd is a bioscience company leaning heavily into traditional Chinese medicine, but with a twist. They're taking a modern approach to age-old practices, specifically targeting neurocognitive conditions like ADHD and autism spectrum disorder. Their pipeline focuses on 3 liquid-based formulae tailored for mild to severe cases, blending centuries of herbal knowledge with today's clinical demands. Now, today's move, up 28% on just 209,000 shares traded, definitely caught some attention, especially given their market cap is hovering around $472 million. That kind of price action on relatively light volume suggests either a short squeeze brewing, some quiet accumulation, or maybe just renewed speculative interest in the TCM biotech niche. There hasn't been any major news drop, but in cases like this, sometimes it's about sentiment shifting or whispers of progress in the pipeline. Regencell has always been a bit of a story stock, unique approach, niche focus, and a passionate founder narrative. And with so few pure plays targeting ADHD and autism through the TCM lens, any tailwind, even a whisper of trial progress or commercial momentum, can send the stock flying. So while today's surge is exciting, it's also a reminder of how thinly traded names can swing hard on light catalysts. Interesting company with a bold mission. Definitely one to keep on the radar if they can start converting vision into tangible, data-backed milestones. A review on RXRX. Recursion Pharmaceuticals Inc. is this really fascinating tech meets biotech company that's trying to flip the script on traditional drug development. Instead of the slow, expensive model we're used to, they've built an AI-powered platform, the Recursion OS, that maps trillions of biological and chemical relationships to help scientists find new treatments faster. It's part lab science, part machine learning, and very much built for scale. They're working on early-stage programs for tough conditions like neurofibromatosis and Clostridioides difficile infections, but the real play here is in the platform. Now, today's big jump in the stock, up 27% with over 83 million shares traded, didn't come out of nowhere. It was sparked by a pretty major announcement from the FDA. They're officially moving away from mandatory animal testing in favor of modern, human-relevant methods like AI-driven models, human cell lines, and organoid systems. That's a seismic shift in how drug development might be done going forward, and for a company like Recursion, that's basically built to do exactly that, it's a huge signal. The after-hours action yesterday lit the fuse, shares popped more than 30% on the news, and even though things cooled off a bit overnight, we saw another powerful breakout right at today's market open. This wasn't a fluke move. This is the market saying, hey, this might actually be Recursion's moment. And here's why that matters. Recursion already has partnerships with big names like Bayer, Sanofi, Roche's Genentech, and Merck KJ. They're not some AI on a PowerPoint kind of company. There's real infrastructure, real backing, including from NVIDIA, and real data, like 60+ petabytes worth. So when the FDA says, we want AI to play a bigger role, it immediately raises Recursion's profile. Could this lead to more deals? More validation? Absolutely. That said, this isn't a no-risk story. They're still clinical stage, still burning cash, and their most advanced programs are only in phase 1 of 2. But for more aggressive investors who believe in the future of AI in biotech, this could be one of the most exciting names in the space right now. The stock's move today felt like a turning point. Not just a spike, but a wake-up call that the regulatory tide might finally be catching up with the vision Recursion has been building toward all along. Our review on SDGR. Schrodinger Incorporated is one of those companies that's really shaping the future of drug discovery. With its physics-based computational platform, Schrodinger has been enabling researchers to discover molecules for drug development faster and more efficiently. Their platform isn't just for biopharma. It's used across industries, including material science, and has caught the eye of over 1,800 academic institutions worldwide. Schrodinger's pipeline includes some promising drug candidates like R1505 and DA2921, which are targeting serious conditions like cancer and autoimmune diseases. Now, let's talk about today's big move. Schrodinger's stock is up 27% today, and a lot of that surge comes from yesterday's after-hours action, which was sparked by a major announcement from the FDA. The agency shared plans to phase out its reliance on animal testing, moving toward more human-relevant testing methods like AI-driven models and organoid-based lab tests. For a company like Schrodinger, which is already deep into AI and computational models to help with drug discovery, this shift is a big deal. This announcement really plays to Schrodinger's strengths. They've been using AI and simulations to predict molecular behavior and toxicity, and now the FDA is signaling a broader acceptance of these methods across the industry. This shift could mean faster, cheaper drug development processes, and with Schrodinger's platform already well-positioned in that space, it's no surprise their stock is getting a nice bump. Shares jumped 15 to 25% in yesterday's after-hours trading across a few key players in the healthcare tech space, with Schrodinger leading the charge. For investors, this is a signal that Schrodinger's platform is becoming more critical than ever as the FDA embraces more modern, tech-driven approaches to drug testing. Sure, Schrodinger's still at the clinical stage with a lot of its own drug candidates, but today's price jump is a solid reminder that the tech behind their drug discovery process is taking center stage in a new era of biotech. Our review on SLP. Simulations Plus Incorporated is a standout in the biopharma world, offering cutting-edge software and simulation tools designed to accelerate drug development. They specialize in AI-driven simulations that predict how drugs will behave in humans, eliminating the need for traditional animal testing. This focus on innovation has made them a key player in the space, providing solutions that improve the efficiency and safety of drug development processes. Today's big news? The FDA has announced it will phase out animal testing in favor of more modern, human-relevant testing methods, like AI-driven simulations and human cell models. This is a game-changer for Simulations Plus, as their technology is perfectly aligned with the FDA's new approach. The market has responded positively, with the stock jumping 26%, largely driven by after-hours trading yesterday as investors digest the long-term implications of this regulatory shift. For investors, this is a major opportunity. With the FDA pushing for faster, safer drug development through AI and human-based testing models, Simulations Plus stands to benefit from increased demand for its software. It's a clear sign that the company is well-positioned for future growth, especially as the industry moves away from outdated animal testing methods. This could be a very exciting time to watch the stock, given the potential for increased business and market relevance. Please subscribe, give the video a like, and watch more from our playlist. Thanks.